Bitcoin emergency update. Have we made that low that we've been desperately waiting for? I believe so. And we're going to look at the reasons why on a weekly momentum time frame. And we are going to continue with day 11 of the follow me on the Binance coin. We've been doing the trade setups. There's a nice shorting opportunity that we're going to look at in a logical, mechanical, objective, non-emotional way. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. Starting off with Bitcoin. So Bitcoin since November, we pegged this quite nicely back in November. We had this nice movement to the downside, an ABC correction, and then a further move to the downside. But we've had this little impulse to the upside. So we're going to look at this. So there's two things I just want to cover simply with Bitcoin. It's too early to say. We don't want to get overly excited too soon. But I'm going to jump into my weekly chart. And what I've highlighted over here is two momentum indicators which measure the rate of change. They're the same indicator, just with different settings, different look back periods. But when both of them are oversold or bullish, that's a good sign that we should see some type of low being made. So the fast line, the fast indicator, you can tell that the blue line's over the red. And in the slightly slower look back period, these are just really measuring the momentum, rate of change, momentum, the acceleration and deceleration of Bitcoin's price movement. So this gives us a big indication that we are likely to see some type of low being made that's going to hold for at least some time. So what kind of low do we anticipate? Well, that we don't know. So that was BNB. We're going to jump into that in a second. Let me just jump back into the daily chart. So what we don't know is, are we going to get a continuation? So we're going to get a movement like this going from up here? Or are we going to get more of a correction like this to happen again down over here? So only time will tell. So the price data, as the data unfolds, will tell us the psychological mood of the buying and selling behavior. So ideally what we want to see over the coming weeks is this high being exceeded. Well, first the price to trade into this range, and then for this high to be exceeded. If Bitcoin does that, that's going to be very optimistic, breaking this, overlapping into this range and into this range, but more so breaking this swing high, this really key massive swing high. These ones are also important as well, but this one is pivotal. So if we get a price movement like this, and it's in some type of 5-wave sequence, like, something like this. If we got this, that would just be ideal. Again, not saying we're going to get it, but it's for the price to tell us. And if we get something like this, that's going to be very optimistic. However, on the flip side, if we end up getting something more similar to this, which is more this ABC style correction, we want to be very, very aware. And it'll be a few weeks before we really get to know. So right now, we won't know that information until the market data unfolds. But there are going to be some good buying opportunities over here to ride these waves. This will be like the minimum expectation, something like this, because again, both the weekly momentums are bullish. So hopefully that makes sense. That's the quick Bitcoin emergency update. The key piece of information to take with this update is the weekly momentum, both look back periods. Technically it's called the 8533 and the 13855 are both looking like saying the downside movement should be limited, and now we should be sideways to up for a number of weeks, maybe 3, 4, 5, 6, maybe 7, 8 weeks sideways to up, which is what we've been patient for, which can be very optimistic for the entire market. So now let's continue with BNB, the follow me guide. We've been following this. Today is day 11. Day 11, we've been doing this day by day. Follow me. We had a nice short-term setup where we went short on the market. I've got bars showing now rather than lines. I'm going to show you why in a second. Went short over here, stop loss over here. We rode most of this. We got stopped out around here and over here for 7.2% profit overall. And now, what is the setup? So I've done a bit of analysis. Now, I'm going to be using Elliott Wave and Fibonacci. Elliott Wave in terms of the pattern position, and then Fibonacci in terms of the ratios of the waves. So if you're not familiar with Elliott Waves Fibonacci, or you just want to recap, I've actually got a masterclass in the link below. It will take you to a page like this. It's instant demand, it's absolutely free, and you can just go into it, because that's what we're going to use to really identify the technical position of Binance Coin, and is there a further shorting opportunity where we can make money on the way down. That's what we're going to look at. So it's worthwhile pausing this, go do the masterclass, and come back, and then, especially if you're not familiar with this, because that's what we're going to use as our guideline. So what we're looking at over here is a potential larger degree A, B, C correction. And what we want to be aware of is wave C's typically unfold into a 1, 2, 3, 4, 5. So it looks like a textbook style Elliott wave pattern, which is really, really healthy for us. We've also got some key Fibonacci ratios with the 78.6% retracement. We've got the alternate price projections, and we've also got some end of wave 5 price targets and external retracements. So this cluster zone is telling us there's a very high probability we're going to see some type of high very soon. And if it does end up being a wave C over wave 2, it means that we're likely to see this low to be exceeded on the downside, right? So then that tells us there might be a good shorting opportunity to leverage this information. So this is trend over here, and we anticipate a trend continuation, ideally, or a minimum of just matching this amount, or ideally going a bit further down to the downside, which you don't need to get too anal about. So before we go into the details of entry, we're going to do some time analysis in a second. But before we do that, we want to be aware. I'm just going to pop out of this and pop into the daily momentum. This is the daily momentum. The thing about the daily momentum right now, so what we were looking at was a 4-hour chart where there's 6 new bars every single day. There's a new bar of data every 4 hours, so 6 new bars every single day. Where the daily momentum is actually bullish, and it's not good practice to trade against the higher degree time frame. However, if you're experienced and the pattern is really, really clear, and the price is really, really clear, and there's some time factors, though the higher degree momentum might not be saying, okay, it's not looking bearish right now, but the pattern and price overrides momentum. So you should ideally have a trade plan that gives you these rules and these setups of what you can look at to take a trade and what you shouldn't be looking at to take a trade. So for me, this actually qualifies, even though this is bullish right now, it's only going to take 1 or 2 days worth of data to go down to get a bearish reversal mid-level over here. So just keep that in mind. For sometimes it depends. If the pattern weren't so clear and the price weren't so clear, we wouldn't look at this particular setup. We'll just be patient for one or 2 more days for a bearish reversal or for the momentum to be oversold. However, because this price is really clear on 2 degrees of time frames, 2 degrees of counts, which is this A, B, C correction, and what looked like to be a textbook wave 1, 2, 3, 4, 5 of a wave C of a wave 2, right? So it's really, really clean. So what will be the first major indication that will tell us as a signal that might also be a good entry point that this wave C is going to hold, is highly probable, is in a technical position to hold? Now, it doesn't mean it's guaranteed. We have to have capital exposure, which we're going to risk to find out if we're right. If we're right, we make a profit. If we end up being wrong, we take a loss. Or if we manage our position very tightly, we might be break even or even make a small profit even when wrong. So now let's look at this logically. Okay, so if this is a wave 4, well, if the wave 4 is exceeded, then that'll be the first major signal. So that's going to be our entry point. I've actually put an order for this to go, okay, we can go short if the price goes 1 tick below this. And what I mean by 1 tick, the low over here is 311, so 311.8. So we'll be happy to go short at 311.7, right? And where should the stop loss be? Well, the stop loss should be no higher than this swing high over here if this low gets exceeded. So before we go into a bit more detail there, it's going to do some time analysis, right? I'm going to be launching a new Fibonacci time masterclass soon. It's not ready yet. It's a complex topic, but I've been simplifying the heck out of it, spending hundreds of hours. So I think you're going to really enjoy that. That's going to come in the very near future. So let's just do some time retracement. So when we're measuring this wave 1 to the downside, most retracements occur between 38 to 62%. And what we'll see, if I just get rid of this, is that this particular correction from here to here has gone way beyond these 2 points, which is typical. This is the typical range. So they're no longer valid. So now we need to look at some other time factors, which can be very, very valuable and helpful. We're going to look at two. One is going to be, we're going to measure this wave A and project it forward from this wave B. And then we're going to do something called a low to high ratio time zone, which is quite reliable for a typical maximum on the next high. So I'm just going to draw these lines. Again, I'm going to do a masterclass on this in the very near future. So we're going to look for two particular, the 100% is the most common, and 1.618 is the typical maximum. So we know that we can see that we're in this zone. And then we're also going to do the low to high. We're going to measure this low to low, and we're going to project forward. Let me just double do that again. Low to high. And then what we're going to do, don't worry about this too much. I'm going to do a masterclass that covers the details of this. And it falls right in the middle. You see that over here? It falls right in the middle over here. So this tells us that we've got a very high probability price and time zone over here. So though the higher degree time frame of daily is not in our favor right now, pattern and price and time overrides momentum. So here we can say, okay, and again, only you can decide. You have to make, it's like a business decision, an executive decision that you need to make to go, okay, looks like a pretty clean move to the downside, overlapping waves for a correction, looks like a wave 5 of a wave C. Okay, happy to go short, one tick below this swing low over here with a stop loss over here. So this differential from this entry to stop loss represents 3%. You know, it depends on your trade plan. It might be 1%, might be 5%. 5% on the maximum side, 1% on the low side, but 3% is what I personally like. So we go, okay, if we get triggered into this trade, we want to give the market a lot of space, because if it unfolds as anticipated, what we're going to anticipate is, and we're going to finish on this, is that the market, the minimum expectation from a Elliott wave standpoint is that the market will do this high to this low, projected from this potential high, which is not confirmed yet. And we want to look at the 100%. And it's only when the price is potentially approaching this range, unless a particular 5-wave structure is unfolding, that we want to look to manage our position on our first unit. So what I like to do is have 2 units. First unit is insurance. What's the minimum that the market should do if we're wrong? So that's what we're looking at right now. And we look to really tighten our stop losses if this occurs. And that protects us. That protects us for if the market literally just reverses and stops us out. So we make a small profit. We want to have logical points where we're going to move our stop loss to break even. We're going to look at that over the coming days if we get triggered into this trade. And then unit 2, the second part of our position, is our profit unit. We want to go, okay, what if we're right? If we're right and it unfolds as anticipated, what should that look like? Well, what that should look like, again, probabilities, never certainties, is this 1.618 wave 3. And if it approaches this point here, we want to look at logical, mechanical, we will need to make some judgment calls. It might be a bit subjective, but if it unfolds into some type of 5-wave sequence, something like this, let's just draw this out. Again, probabilities, never certainties, because we're now just forecasting what might occur. This over here would be when we'll be looking to tighten our stop loss on our first unit, because that's the minimum expectations. And then if it does something like this, then we'll be looking to tighten on our stop loss to lock in profits over here. And this will be some significant profits, be really, really healthy profits. But on the flip side, just keep in mind that we could get triggered into the trade, and then it could go on to make a higher high. And if it does, we'll get stopped out and we'll lose 3%. And that's just the name of the game of trading. So if you're not used to Elliott waves, one of the most powerful tools that allows you to see if the market's likely to be in a trend or a counter trend. So right now it looks like it's in a trend to the downside, and this immediate part is overlapping waves, and that tells us there is likely to be a correction. Likely, so listen to my words, likely to be, highly probable there is a correction. If that's the case, we should see this low get exceeded, and then this impulsive wave to the downside should continue in a particular structure, and that's what we're looking for. And then also the Fibonacci ratios. It's one of, again, combined with Elliott waves, one of the best things when it comes to trading, because it gives you a logical, mechanical way of seeing what's likely to occur. And when these key Fibonacci price zones combined with pattern, combined with time as well, which we're going to add in more and more as the data unfolds, and then momentum, the rate of change, that gives you 4 pieces of valuable information. And if 2, 3, or 4 of them are telling you the same thing, is more often than not that would likely unfold. So we're going to follow this day by day, see how it unfolds. So take the Fibonacci and Elliott Wave Masterclass, so just get you up to speed, especially that we're following this day by day. So it's like on-the-job learning, and you'll see these wave structures make more and more sense. Because not only in BNB, you'll see them in Bitcoin, you'll see them in Ethereum, you'll see them in top 100 coins. Around 50 to 70% of the time, they're relatively clear, and that gives us useful information from the technical position, which is really measuring the psychological mood of the buying and selling behavior. And we can leverage that information to go, right, here's a logical place to go long or to go short. What should not happen if it is this, right, that's where our stop loss goes. And then we can manage our position using momentum, using pattern, and using price also. Woo! Covered a lot. So we did a Bitcoin emergency update. We know the weekly momentum is in a key point for a major low. We don't know if that's going to be a new trend unfolding to higher highs, or if it's just going to be another big correction to new lows. We can only be patient and wait for that. And today we also covered BNB day 11. Day 11, this is supposed to represent 11. I was like, how do we do 11? We got like this. We represent 11. And we've got another short trade opportunity, more based on pattern and price and time and momentum on the lower degree time frame, but not on the daily time frame. But if it does trigger us, we'll more than likely see that flip around as well. So if you like today's video, like, subscribe, hit the bell notification. The other day I was watching The Last Dance. I've watched it a few times. It's the Michael Jordan documentary, Chicago Bulls. So with that said, I'm going to read the Michael Jordan quote because I think it's really, really relevant. And we need to take the shots. And knowing that not every shot is going to go in. And the best traders on the planet are only correct around 3 to 5 times out of 10. So a third to a half. So 33 to 50% of the time is when we're looking to be right to ride those trends. And other times we either take a small loss, we break even, or we make a small profit. And that's the name of the game. So we're going to have the expectations really, really clear that the shot that you take, 1/3 to half is what great looks like. If you're 5 out of 10 and you're getting those trends right, 5 out of 10 of the time, 50%, you're amongst the trading elite. So when people tell me they're like right 7, 8, 9 times out of 10, I go, hey, I don't know what right looks like for you, but the trading elite, people that have been trading for decades, 3 out of 10 or 5 out of 10 is what great looks like. So we want to know that because it's just managing expectations as well. So Michael Jordan, I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. So the art and science of trading is not about focusing on getting the shot in. It's about getting highly probable setups like we saw today based on technical positions. So today we looked at really pattern and price and time. They were the major 3. And then we've got a signal, a trade signal to say the swing low. So it's highly probable. So now we can take the shot. Now, does it mean if the trade gets stopped out, we made a bad decision? I go, no, we made the right decision based on the information that we got right now. And then if it unfolds, we manage it logically. We want to have a reason for adjusting stop losses and everything else. So it's about taking those shots, but in a high probability fashion that you can do consistently, looking at the chart once a day. You shouldn't be looking at it all day, 5 times. It's the bad habit of being a trading junkie and looking at the price. Oh, it's gone up. Oh, it's gone down. Oh, it's gone up. No, you want to just have a nice plan where you go, just look at it at 9 in the morning or 6 a.m. in the morning or 10 p.m. at night and just have your time frame. And then it becomes very easy or much easier to be non-emotional about the outcome. You can't be emotional about the outcome because you don't actually have control over the outcome. The thing you got control over is the technical analysis, the entry point, and then the management of the position if you get triggered in. How it unfolds, where there's millions and millions of participants with billions and billions of dollars with many of these coins. So we don't know what people are going to do. We can only go as highly probable and what's most common and most typical. And if we do that and ride that edge again and again and again, you should find that you end up on top. All right, like, subscribe, hit the bell notification, and I will see you very soon.